We're in a new period of collapse of the US dollar, and it's quite frightening. And it does mean that the dollar will be removed as the world currency. I mean, what will take its place, I think, is still up for grabs. But the US dollar has made itself as unattractive as it possibly can be to world transactions. People are moving into all sorts of alternatives to the US dollar, and they will, and we will all move to a separate alternative regime in the global economy. Maybe Bitcoin, maybe gold, maybe some other set of currencies, but that is the direction we're headed. It was the Great Depression that caused World War II. It was literally the tariffs and quotas and restrictions on trade that caused World War II. It is the weakening of the U.S. We have not done the defense spending correctly. We've not done the economic growth correctly. We've not done sound dollar correctly. All of these have made the U.S. look vulnerable and made it so that people are willing to try us out for size. Frankly, I don't trust the dollar. I don't trust Powell and the Fed. I don't trust the U.S. Congress and government right today to create a good scenario for positive economic growth in the U.S. We are moving away from monetary stability. We're moving towards an unhinged paper currency again. Taxes were moving in the wrong direction. Government spending were moving in the wrong direction. All of these are signs of senescence, of weakness, of fleeing the government policies. And to me, that's not good. The only way of getting around this, of changing this, is with a radical revolutionary economic set of policies. When Trump was president, when Ronald Reagan was president, when Kennedy was president, they didn't mess with us. And the reason they didn't mess with us is we had a strong military and free trade and good economics. They wanted to do business with us and not wanting to fight us. Now they don't want to do business with us because of all of our restrictions and sanctions and all that. And now with the weak military we have, they want to fight us. That is not a winning strategy. Believe me when I tell you, Michelle. And if it goes on, this is what could lead to a serious conflict on a world scale.
On the Spot with Michelle Makori is brought to you by Swan Bitcoin.
Hello, I'm Michelle Makori. Thank you again for joining us. The U.S. economy is moving in the wrong direction, moving away from monetary stability and towards an unhinged paper currency, and the rest of the world is taking notice, and we are running out of time to reverse this trend. That's according to my next guest, one of the top economists of our time. Joining me now is the economic advisor that helped the Reagan administration tackle inflation back in the 80s, the father of supply-side economics and the Laffer tax curve, Art Laffer. Art served on President Reagan's Economic Policy Advisory Board from 1981 to 1989. He was later an economic advisor to President Trump and was awarded the Presidential Medal of Freedom for his work. Art is the founder and chairman of Laffer Associates. He's also the author of several best-selling books, including Taxes Have Consequences and Income Tax History of the United States. Art, so good to have you back with us. Welcome back to Kitco.
Thank you very much, Michelle. It's a delight to be with you.
All right, Art, we have a lot to discuss with you. This de-dollarization trend, the role of Bitcoin, gold, the global economy, the U.S. economy, how to get it back on track, taxes, markets. But before we get into the very big picture, I want to get your read on where we are in the current U.S. economic climate. We have had a lot of market volatility lately, partly fueled by concerns over recession and that the Fed may have waited too long to cut interest rates, and that the cracks are starting to show in the labor market and in the economy. Goldman Sachs, for one, raising the likelihood of a U.S. economy slipping into a recession to 25% now within the next 12 months, but still saying that the risk of a recession is limited. What are you seeing near term in terms of a hard landing or a soft landing? What's your outlook?
Well, I really don't look at the U.S. economy that way, or the world economies that way. And I know we have the ups and downs, and whether it's a soft landing and a crash or bang or whatever. What we have in the world economy today over the last 25 years or so is what I call a period of economic senescence. The world growth rates have declined dramatically over the last 25 years. And, you know, the U.S., you can look at it, the participation rate has come way, way down since the Clinton era. Not only the U.S., but if you look at Europe, there's been a huge decline in Europe as well. Russia just disappeared from the face of the earth. China has reversed direction and I think is coming down. If you go to South America, you look at Chile, which had been the exemplary model of economic growth, that it's now flipped over in the last 3 years, is heading straight south. You can look at Japan. People used to think there was a country called Japan somewhere in Asia. It's disappeared. I mean, in 1989, Japan's market cap was the same as the U.S. market cap. There's been this huge collapse in economic growth, economic prosperity. It's been accompanied by inflation as well, weak currencies. But no matter where you look, whether you look at the EU, whether you look at Britain has gotten so bad, Michelle, that they no longer call the pound, they call it the ounce. Never mind.
I got it. I got that joke. I'm laughing.
And it's been a huge decline. Now, when you look at this decline across the whole globe, it literally is universal. I mean, literally is universal for the last quarter century, just the declining growth rates, declining prosperity, et cetera. That, the U.S. has been sharing this decline as well, but we are the least impacted by the decline of any country. We would be the tallest midget, if you will, in the group. This is what really has hit the world economy, and this is what worries me, and this is what captures my attention. How can we reverse these trends? Now, the same thing happened, let's say, between Kennedy and Ronald Reagan in those 16 years there, which I referred to them as the Four Stooges, Johnson, Nixon, Ford, and Carter. It was the largest assemblage of bipartisan ignorance ever probably put on planet Earth. When Reagan came in, there was a redirection of the world economy, tax cuts, sound money, free trade, minimal regulations, government spending control, and boom, you had this huge growth period. And now we've been in this huge period of decline, and it is decline. Now, yes, you do get the wiggles and bobbles along that decline, Michelle. But the truth of the matter is it's a long period of decline, and that's what concerns me, because at present there are no changes coming into place. And when I look at it, the Biden administration, Harris and her team are reflecting this type of decline almost perfectly in economic policies. And I'll go into that if you'd like me to directly just right now as to what's going on there.
All right. Before we get into the broader global and macroeconomic outlook and your point that the dollar is still doing relatively well compared to the other countries, cleanest shirt in the dirty laundry basket, as I like to say. Before we unpack that, let's focus a little bit more on the U.S. economy. We are seeing some, conflicting signs of the health of the U.S. economy. On the one hand, we're being told that second quarter GDP was at a relatively robust 2.8%. On the other hand, we're seeing markets start to sell off. We're still trying to tackle inflation here. We also just got a report that Americans owe a record $1.14 trillion in credit card debt. That's according to the New York Federal Reserve in the 3-month period from April to June. That is an increase of $27 billion, and that marks the highest level on record in Fed data dating back to 2003. So a lot of conflicting messages and indicators on the health of the U.S. economy. What's your read here?
Yeah, I don't really think they're conflicting. There's nothing exciting in any of this. I mean, if you look at what happened when Reagan came out of the recession there in the early 1980s, from January 1st, 1983 till June 30th of 1984, that's 18-month period, that's 6 quarters, that's a year and a half period. Real GDP growth, and that's exactly when the tax cuts took effect, was on January 1st, 1983. Real GDP growth in that 18-month period was 12%. The U.S. economy grew at an 8% per annum compound rate for a year and a half. We went from just creating huge amounts of jobs, output, and growth. After the pandemic, Michelle, you should have seen U.S. growth rates equal that, if not greater, but they didn't. Now, we have had a recovery from the pandemic, that's true, but we've never quite caught up to the trend line we had prior to the pandemic. And all of these growth rates, 2.8%, 1.9, they're all tolerable. They all exist, but nothing there is exciting. Nothing there is something that will eliminate poverty, that will create opportunities for the inner cities, that will really bring resurgence back to the U.S. economy. There is no evidence out there to suggest that anything's really, really happening well. Now, when you say the dollar is strong, the cleanest dirty shirt in the knapsack You're right if you're looking at currencies versus currencies. But if you're looking at currencies versus goods and services, it's about as bad as I've ever seen it.
Right.
I mean, the inflation rate hit 9%. If you look at the dollar and other currencies, I mean, when you think that we're the cleanest dirty shirt, and yet we had 9% inflation at its peak, mind you, but 2012, what is the price percentage raise since he's gotten in about 20% devaluation of the dollar during that period in terms of goods and services? Even stock prices, which have gone up, in real terms, they haven't gone up. They've been flat for 3+ years. If you look at that, you sit there and say that, the dollar is really losing ground relative to the rest of the world, relative to goods and services. And I don't think the dollar is doing well at all. And it's shown by look at the price of gold. I mean, the price of gold is what, $2,400 an ounce, something like that. Now that's a troy ounce. If you look at the versus Bitcoin, what is it, $50,000 per Bitcoin? That's a huge increase in the price of alternative currencies in the system. All of these are signs of senescence, of weakness, of fleeing the government policies. And to me, that's not good. The only way of getting around this, of changing this, is with a radical revolutionary economic set of policies, which have to come about in the 5 grand kingdoms of macroeconomics. That's where they come about. And I'll go through that if you'd like me to.
All right. Yeah. Talk us through that, the 5 grand kingdoms of macroeconomics.
Well, if you get your macroeconomics textbook there, you can sit there and look at it in the big sections there, the big areas. First one is taxation, of course, my favorite topic. Second one is government spending. That's the second big kingdom. The third one is monetary policy, price stability. That's the third one. The fourth one is regulations. And the fifth area is international trade. Those are sort of the big areas of public policy. And, when you look at these, the way I look at all these grand kingdoms is I look at them in terms of the North Star. What is the best economic policy for each of these grand kingdoms? And when I look at taxation, for example, Michelle, I mean, the ideal tax system is to have the lowest possible tax rate on the broadest possible tax base. So you provide people with the least incentives to evade, avoid, or otherwise not report taxable income. And you have the broadest possible tax base. So you give them the least number of places where they can stick their income in order to avoid paying taxes. That's the North Star. That is the place where you have the ideal tax system. Now, the way I judge macroeconomic policies is looking at that North Star. Are we moving towards that North Star, or are we moving away from that North Star? For the last 3 years, we've been moving very much, maybe even 4 years since the beginning of the pandemic, let's say in mid-2020, we've been moving away from that North Star. And substantially, their taxes have gone up. We've dropped a lot of the issues there. Unrealized capital gains has been inflated by the price level, all of that. We're moving away from it. That is a very bad sign. Now, on government spending, everyone knows government needs to be in all sorts of areas, and no one argues with that. But there's an optimal level of government. When you've got too little government, you need to increase it. We need post office. We need judiciary. We need highways. We need defense. We need all sorts of things. But we need them in moderation. And if you're spending too much, that will hurt the economy. If you're spending too little, that will hurt the economy. For example, in 1910, total government spending as a share of GDP in the U.S. was a little less than 3% of GDP. Now it's something like almost 43, 44% of GDP, which is huge. I think government spending restraint is necessary. And the last thing that's happened in the last 5 or 6 years has been spending restraint. I mean, literally, we're moving in exactly the opposite way of the North Star in spending. Now, monetary policy, the key here is we need a sound money. There's nothing that can bring an economy to its knees quicker and faster than unhinged paper currencies. And those unhinged paper currencies lead to high interest rates. They lead to high inflation. They lead to a huge expansion of the Fed's balance sheet. That's exactly it. We are moving away from monetary stability. We're moving towards an unhinged paper currency again. Taxes, we're moving in the wrong direction. Government spending, we're moving in the wrong direction. Monetary policy, we're moving. Regulation. We have all sorts of regulations that have been imposed on the U.S. economy, especially in healthcare, especially in energy, and in lots of other areas. All again, you want minimal regulations. We need regulations badly. We really do. But we want to make sure that we don't go beyond the specific purpose at hand and create a lot of collateral damage to the overall U.S. economy with unwarranted regulations. And in that sense, we are moving in the wrong direction. We need to deregulate the economy, not regulate. And lastly, and the most important one of all, and forgive me about this because I'm a little bit off from the mainstream on this one, but trade. I mean, the U.S. economy was created by free trade. From 1640 until 1870, for 230 years, the U.S. ran trade deficits. We built our country on importing capital from the rest of the world. I think there were 5 years or 6 years that we had trade surpluses during that whole period. We had trade deficits and capital surpluses. And those years were 1776, 1775, when we were at war with Britain. No wonder they wouldn't lend us money. 1812, 1813, again, another war with Britain. They wouldn't lend us money. And then we had the big canal collapse in the 1840s. Up until 1870, we'd run trade deficits every year. We built our country with capital from abroad, and we had free trade. It really gave us the prosperity we have. And now we see all sorts of people trying to impose sanctions and create trade restrictions and all. Trade is not a political weapon. Trade is an economic policy that creates prosperity. If you want to get angry at a country, use your military. If you want to get angry at them verbally, use your State Department, but leave trade out of the mix. Any impediment to the free flow of goods and services is bad for us. It's bad for foreigners. And this is especially true, Michelle, with regard to our presumed enemies. We should be trading with Russia. We should be trading with China. We should be trading with Iran. We should be trading with North Korea. Now, I'm not suggesting we sell nuclear weapons to them. That's not what I'm suggesting. But once you trade with people, you understand them, you do business with them, you like them, they pay you, you pay them. It's a wonderful thing. And you send them birthday cards and wedding anniversary things and all of that. And you talk over differences. You talk over your problems rather than fighting and shooting. And, sanctions are a very, very bad, crude, vulgar instrument of international policy, and they don't work. We've been sanctioning Cuba now since 1959. What's that, 65 years now, Michelle? And you can see how it's worked. I mean, how Cuba now has seen free market, democratic, pro-growth economics as being the answer, and America, how much we love you. It's false. Never should you use trade as a political weapon in the world economy. You should never do that. You should always use the State Department and the Defense Department, but not trade. Trade is a measure of peace. Bob Mundell, your famous Canadian economist and my dearest friend and colleague, he was my mentor throughout all of my years in economics. He, in his Nobel laureate speech, said it was the Smoot-Hawley tariff of 1929-1930 that caused the Great Depression. And it was the Great Depression that caused World War II. It was literally the tariffs and quotas and restrictions on trade that caused World War II. That is his Nobel laureate address. And messing around with trade is the most dangerous, stupid thing I have ever heard. And so that's what we should do: is low rate, broad-based, flat taxes, spending restraint, sound money, minimal regulations, and free trade, especially with countries you don't agree with, because we need to have interaction with them and understanding the problem. We can sit there and say, well, you Chinese, so you're not treating your Uyghurs well. Yeah, well, you Americans aren't treating the blacks well in Alabama. Have conversations about it. Don't sit there and go, get the mad, nasty, angry person. I can just see Hillary now in her pantsuit yelling about sanctions on these sanctions and we'll get you guys. No, that's not the. Since Trump left office, we're in 3 wars now at least. We're in the Gaza thing, we're in Ukraine, and we have the Houthi rebels there, and we've got problems in Colombia and Central and South America. We've got problems all over the world in China and Taiwan, all because of this absolutely silly policy of sanctions, protectionism, and using trade as a weapon. That's my lecture.
A lot to dissect there, but let's focus on this idea of sanctions and trade and how sanctions and weaponizing the US dollar may, in fact, lead to its ultimate demise, because there are concerns that a pivotal point was the sanctions imposed on Russia and kicking Russia off the SWIFT system, that move by the Biden administration set in motion an irreversible trend of de-dollarization and the bifurcation of the global monetary system, so much so that even Janet Yellen has recently acknowledged that sanctions and weaponizing of the dollar will see the world use less dollars. And we're seeing that trend accelerate.
Yes, exactly. That's exactly what I'm talking about.
Right. Since then, we've seen countries think twice about having dollar reserves, and we're seeing countries, particularly the BRICS Plus, actively dumping the dollar, saying that they should be trading in their own currencies. China and Brazil, the world's most populous and the sixth most populous countries, working to trade more in their local currencies, the yuan and the real. The petrodollar is on very shaky ground. The agreement there not renewed. Whether it was official or not is a whole other conversation, but point remains that oil, which used to be sold exclusively in dollars, is now being sold in exchange for other currencies, from ruble to yuan to rupees. In fact, JP Morgan Chase has estimated that about 20% of the world's oil has been bought and sold in other currencies, and that was just last year. We don't have the latest data on where we are in 2024 on that. According to the IMF, another statistic here, dollar reserves held by central banks fell to 58.4% during the fourth quarter of 2023, the lowest level in 25 years. So we've got central banks buying gold at record levels and reducing their share of US dollar reserves. And in May, we learned that China sold off a record amount of US bonds in the first quarter, intensifying its shift away from dollar-denominated assets. Japan also has been selling US Treasury securities for several consecutive months, this trend happening around the world. The BRICS are also actively working on a new common currency, potentially backed by commodities, to move away from the dollar. And many would say that the inflection point was that excessive weaponization of the dollar against Russia after its invasion of Ukraine and the freezing of Russian assets, and then, of course, kicking Moscow off the SWIFT system, that was a pivotal point there. And that was also compounded by the preceding debacle of the Afghanistan withdrawal by the Biden administration and the way that worked out. So where do you see this de-dollarization trend going? How seriously should we be concerned about it and the dominance of the US dollar as the global reserve currency?
You've made my point perfectly, Michelle. I mean, this is exactly the right point. We did this once before, if you remember, in the 70s. In the 70s, we did it with Russia as well. We had all sorts. I don't know if you remember Jimmy Carter precluding them from the Olympics and all the stuff. And it caused the euro-dollar market to develop where world currencies could be operated outside of the political control of the U.S. government. The same thing you're seeing happening right now. I mean, the dollar has been made to be not a good international currency, and people are moving into all sorts of alternatives to the U.S. dollar, and it's only natural. And these currencies, the U.S. dollar specifically, should not be politicized, should not be a weapon. And if you do going to make it a weapon, you're going to lose your control. We're going to lose the seigniorage gains of the dollar in the world community. And they will, and we will all move to a separate alternative regime in the global economy. Maybe Bitcoin, maybe gold, maybe some other set of currencies. But that is the direction we're headed, exactly as you laid out. You hit the nail right on the head. And it's just silly what my government has done on trying to use the dollar as a weapon.
Again, a lot of topics to explore there. Saying that you do then ultimately see this bifurcation of the global monetary system and the dollar losing its status as the global reserve currency. Is that something in the next 10 years, 20 years? Do you have a timeline for that? Is that reversible?
Well, it never happens in 1 minute or 1 day. It's not one where a tipping point and then you fall like Humpty Dumpty from the wall. It's a gradual move away. There are some people who still deal in British pounds, Canadian dollars, rubles, whatever. But the U.S. has had the dominant role as the dollar was the global currency. It was set up in Bretton Woods in 1949, I believe, in New Hampshire there, where the dollar was pegged to gold and every other currency was pegged to the U.S. dollar. And that sort of dollarization gold standard prevailed for a long time. Then it was in 1972 that we had the Smithsonian Accord. We got rid of any convertibility of dollars for gold. at that time. And then we had the free floating dollar, which collapsed, as you'll remember, in the 1970s. It wasn't until Ronald Reagan and Paul Volcker came back in that the dollar resurged again. I think the dollar price of gold went from $35 an ounce to over $1,000 an ounce and then collapsed back down to $350 an ounce or something. But now we're in a new period of collapse of the U.S. dollar, and it's quite frightening. And it does mean that the dollar will be removed as the world currency. I mean, what will take its place, I think, is still up for grabs. But the U.S. dollar has made itself as unattractive as it possibly can be to world transactions.
We'll unpack what could potentially take the place of the dollar, but I want to get your thoughts on reports that former President Trump's economic advisors, I take it not you, are exploring measures to prevent this de-dollarization. And there are reports that the discussions involve potential penalties for nations, allies, or adversaries engaging in bilateral trade using currencies other than the dollar. Options on the table include export controls, currency manipulation charges, and tariffs. Now, arguably, that would be even worse, right? I mean, what are your thoughts if that was the approach that should the Trump administration come back into power, that they go by that route?
Yeah, no, this is one I really love to get onto because when it comes to Donald Trump and the Trump administration and Trump plans, you should look at what he does much more than what he says. During his administration, he was talking about tariffs. Everyone says he's the tariff man. But in my view, he did some of the best trade deals ever. The North American Trade Agreement was absolutely wonderful. The deal with Japan, the deal with South Korea, these were all much freer trade there. I believe that Donald Trump has used the threat of tariffs as a negotiating ploy to bring other countries to the table to negotiate freer trade. In fact, supposedly when he was going to meet with Kim Jong-un in Singapore, the story is he was in your country, Ottawa. He was in Ottawa with the G7, and he had to leave the meeting a little bit early. And so he apologized to the other 6 members that he had to leave early because he was going to Singapore to meet with Kim Jong-un. And he said, I know you got people understand how important it is that I do go to Singapore and meet with him and for world peace. But I do want to, before I leave, I have a deal to make with you. The U.S. is prepared to eliminate all tariffs and all non-tariff barriers if you guys are too. And there, everyone was whistling, looking at their shoes, looking up at the air. Trump, I believe, is very much of one who wants free trade, who wants to bring it down. The only tool he has to bring people to the negotiation table is the threat of tariffs, the threat of precluding people from access to the U.S. market. And everything I have seen from Donald Trump, given his history, et cetera, tells me that he would love to be free trade, but he's got to get the other people to join with us. It can't just be U.S. be free trade and everyone else use all the power. And that's where Donald Trump is. When I look at Donald Trump with regard to tariffs and quotas and all this stuff and weak dollar and all that stuff, look at the inflation rate in the U.S. under Donald Trump and look at what it has been under Joe Biden and Kamala Harris. And you can see that under Trump, the inflation rate, I don't think it ever made it over 2%, even 1 year. And it was in the 1.5% range, which is pretty, for modern day, it's pretty stable. Then when Biden came in, the thing took off. So when you look at what is rather than what is said, I always look at Trump. I always look at Trump at what he does, not what he says. And what he does has been just spectacular. I mean, his Tax Cuts and Jobs Act was fantastic. When I look at his medical transparency policy, 1/5 of the U.S. economy is healthcare. And we don't know the prices or the qualities of any of the products we see. We don't know what they are. We have no way of making good market judgments about them. He put through an executive order on price transparency that I think it was the greatest ever. He decontrolled oil, and the U.S. became energy independent during his period in there. If you look at his Supreme Court appointments and what they've ruled on with regard to regulatory bodies in the U.S., it's unbelievable how well he's done. The trade deals he did, I think, were all excellent. When I look at Trump on all 5 grand kingdoms of macroeconomics, tax policy, terrific. Spending policy, pretty good until the pandemic. Regulatory policy, great. I mean, really great. Monetary policy, low inflation during the whole period there. And then you look at him in trade policies, the trade deals he struck were pretty darn good, Michelle. So you hear the words out of Donald Trump and everyone gets all excited. But when you look at what he's done, it's really amazing. So I would always suggest, and it's just a suggestion, and I don't speak in any way, shape, or form for Donald Trump. He's his own person, believe me. But what I would suggest, you look at what he did and not what he said. And when you look at what he did, take him seriously, but not literally. How's that for a good phrase? And he did a great job on economics, and I'm just impressed as all. I mean, look at Operation Warp Speed. I mean, what we did on getting that vaccine in 11 months because of Donald Trump. My daughter's alive today. She got metastatic melanoma, 4th stage. And it's because of all the research we did on mRNA that she had about 8 weeks less to live. And they're down in MD Anderson in Houston, and they did this Abduolag of immunotherapy on mRNA, and she's alive a year and a half later, doing much better. The tumors have shrunk dramatically. I mean, this is all thanks to Donald Trump. He did the right to try. If you've got a terminal sickness, you have the right to try any drug, no matter what it is, if you want to, if you are terminally ill. The FDA has no right to prohibit you from doing that. All the Democrats voted against that thing. He got it through the House and the Senate. I mean, how wonderful is that? Look at what this man does, not what he says. And I think you'll be very impressed.
Well, firstly, I'm glad to hear that she's doing better and recovering. One note. Second note, just to clarify, I'm a proud American citizen. Our headquarters of Kitco are in Canada, but I'm based here in New York City.
Proud to have you.
But back to President Trump, and I hear your point that he uses certain threats as a way to get people to the negotiating table and to coerce them into having conversations. But back to this idea of de-dollarization. In March of this year, former President Trump, speaking on CNBC, did make this comment: I hate when countries go off the dollar. I would not allow countries to go off the dollar, because when we lose that standard, that will be like losing a revolutionary war. That will be a big hit to our country. Clearly. So what would a Trump administration do then to reverse this de-dollarization trend?
If you make a sound dollar, if you make a dollar that's transactable and allow people to use the dollar, and you make it sound and stable in value. I mean, if you knew that the dollar value of goods and services for the next 20 years were going to be stable as value, that the dollar not only is as good as gold, it's better than gold, who would want to transact in anything other than US dollars? No one would. The point of it here is you want to bring people to the dollar because the dollar is attractive and serves the useful functions. You don't want to threaten people against using the dollar. That's not the right way to go. The right way is if you make a good dollar, people will use it. And that is what I believe Donald Trump wants to do and will do if he gets real.
So, Art, how does one do that? The dollar has lost about 97%, I believe, of its purchasing power here in the United States with the way it's been devalued and debased. How do you make a sound dollar? Does that mean you go back to a gold standard? Does that mean you go to potentially a Bitcoin standard? Something that President Trump and Senator Loomis have sort of floated that idea. I'll get into that in a little bit more detail. Yes, they did. Yes, in Nashville. Do you come up with a basket of commodities, including gold and Bitcoin, where the dollar is backed by that? How do you go back to a sound dollar?
You're exactly on track. Of course, what you want to do is make the dollar as good as gold. Now, Mundell and I and Paul Volcker all wanted to have a dollar standard like the Bretton Woods standard, but there are lots of other ways of doing it. Kevin Warsh and some of these others, Cochran and some of these others have wanted to do it by controlling the Fed's balance sheet. Now, since 2008, I think the balance sheet of the Fed has gone from $850 billion to as high as $9.3 trillion. I think it's now a little over $7 trillion. You need to control the size of the Fed's balance sheet, pure and simple. You don't need to set interest rates. You need to control the size of the balance sheet. You need to bring back reserve requirements for banks. You need to bring control of the monetary system back so you can stabilize the value of the dollar so people will find it attractive to hold and to use dollars. And the US dollar will very naturally once again become the transactions medium of the global community. You can't get people to use dollars if the dollar is a piece of poop. You just can't do it. You've got to make the dollar good and then people will use it, and that's the way to get the dollarization back in the world community.
Would that be enough, though? Just taking action on the Fed's balance sheet? Would you
Well,
not
that
need
would
to
be a
back
good
it by
start.
some basket of commodities potentially?
Oh, yeah, well, yeah, that would be a good start to balance sheet. When you think of it, Michelle, I think in 2008, the balance sheet was about $857 billion. Now it's 7.3 trillion. That's a pretty big increase. I'm not a Milton Friedman fan in this stuff, but, if you double the money supply and you don't increase output, if you do all the anti-growth policies you can think of, which has happened with a small exception of the Trump period, if you do all the anti-growth and anti-goods policies and all the flooding of the market with money, you're bound to get inflation, and we have, and you've ruined the value of holding dollars and transacting in dollars. I want to see those policies reversed. I want to see the balance sheet under control. In fact, I'd like to see them reduce the balance sheet dramatically. I would like to see them cut tax rates, broaden the tax base, cut welfare spending, bring the dollar back to strength. And I think you'd see the U.S. currency again becoming the normal medium of transactions in the global commodity, and we wouldn't need to worry about de-dollarization of the world community. Russia and China and all of them would use the dollar, but make sure you don't use the dollar as a weapon against other countries. The dollar should be a transactions medium in the global economy, and everyone should be allowed to use it anywhere at any time as long as we're not at war with them. That's it.
All right, let's firstly talk about what it means to balance the Fed balance sheet and what that would do to the economy in terms of how would that impact the economy if all of a sudden you had that happening?
And let me just ask you a question. If you knew there were never going to be inflation again in the U.S. economy for the next 50 years, would the U.S. economy be better or worse?
Well, it would arguably be better, but I don't know that I would have conviction and full faith in that idea, right? I'd be pretty skeptical if somebody told me that.
Of course you would be skeptical, and so you should be. But after demonstrating it year in, year out, it takes a long time to develop the confidence in markets. I mean, you just can't come and say, trust me, because, they've all said that, and then they've all gone and ruined you.
So there'd be short-term pain, safe to say. If you did that,
there shouldn't be any short-term pains at all. If you knew the dollar were going to be stable in value from now on, I can't imagine anything that would be better for the U.S. economy than stable prices going forward. It just wouldn't be. I mean, that would be amazingly good for the U.S. economy. Once they start...
But to get that, Art, you'd have to dry up liquidity. You'd have to...
The problem with inflation is excess liquidity. You can't have stable prices and excess liquidity. That's why we have no trust in the dollar. That's why people are leaving in droves from the dollarization. What you need to do is reestablish trust in the U.S. dollar, and that's soaking up liquidity, letting market interest rates go to where they should be. The Fed should not be controlling interest rates. It should be controlling the balance sheet. I don't know if you saw Kevin Warsh's piece in the Wall Street Journal, but it's the balance sheet. He said, I'm quoting James Carville, it's the balance sheet, stupid, nothing else. That's what the Fed should be focused on, like Paul Volcker did. Paul Volcker brought us, I don't know if you remember what interest rates were. When we took office on January 20th, 1981, the prime interest rate in the U.S. was 21.5%. He brought that way, way down for the 8 years. He reestablished credulity in the U.S. dollar and made it so that the dollar was once again the global transactions medium. We can do that again if we had a good Fed. We can do that again if we have a good president. Rapid economic growth and output of goods and services like what happened under Reagan, and a sound monetary policy like what happened with Paul Volcker, and you will get the dollar moving right back as being the transaction medium of the world economy. And that's the only way to do it, and that way would increase growth dramatically.
What about the argument, Art, that a strong dollar is bad for America's export economy?
Well, the reason people export to the U.S., and especially capital, as I told you, from 1640 until 1870, that 230-year period, the reason everyone exported all the goods to the U.S. and imported very little from the U.S. is because we were the growth country. We were the capital magnet of the planet. Which would you rather have, Michelle? Capital lined up on your borders trying to get into your country or trying to get out of your country? Clearly, you'd rather
obviously trying to get it. Yeah.
and that means we'd be importing more goods than we export. That's because we have better investment opportunities than the rest of the world. We're freer markets, we're better trade, we're better tax policy, we're better monetary policy, we're better regulatory policies, and we're attracting the global capital, which is what Reagan did. We had huge trade deficits under Reagan as we grew through the moon.
Well, just to play devil's advocate here, if you're looking to onshore manufacturing and you're competing with other manufacturing hubs around the world, like China, like Vietnam, doesn't a strong dollar hurt that? Because you're going to have to pay more to get the goods made in the US, which makes the price of that good more expensive to whoever may be buying it, either domestically or internationally.
You've got to distinguish sharply between the terms of trade and the exchange rate. The terms of trade is the relative prices of the goods and of the exports and imports. The exchange rate is the value of the dollar vis-a-vis other currencies. From 1970 to 1985, the U.S. dollar doubled in value in the foreign exchanges. And yet during that time, the U.S. trade deficit increased, the U.S. capital surplus increased. We increased capital investment, employment, and production in this country amazingly, Michelle. It was the period of the greatest prosperity we've seen in generations. It's the exact same thing that happened under Kennedy and Harding and Coolidge in the 1920s. It was just wonderful. There is nothing wrong with a strong dollar. You want king dollar. As your friend Larry Kudlow says all the time, we've got to get back to king dollar and making the U.S. the most attractive place to produce goods and services in the world economy. And we can do it very well with good policies. That's all we need to do. And then the rest of the world will learn from us and we can get global prosperity. That's what we really need Pakistan, where I spent a lot of time recently in Islamabad with Imran Khan and all that. They need prosperity more than anything on earth. And they have a weak currency. They have a horrible tax system. They need pro-growth policies desperately, and we can teach the rest of the world how to do it.
All right, let's go back to this idea of strengthening.
Does that make sense to you first?
It makes some sense. I think it's. You're the economist here, so it does. It does make sense.
Let me be the layperson. If you have two locations, A and B,
right,
and you cut taxes in B, and you raise them in A, producers and manufacturers and people are going to move from
B to A.
Thank you. I'm trying to make the U.S. a low-rate, broad-based, flat tax, sound spending, a sound currency, minimal regulations, and free trade. Everyone will want to move all of their production facilities into the U.S. We will become the capital magnet of the planet. That's what I'd like us to do. And then I'd like to see us transmit and transform and educate the rest of the world on how they too should lower their tax rates, how they should have strong currencies, how they too should have controlled spending, freer trade. That is exactly what happened during the Reagan Revolution. We did it first, and then all the rest of the world cut their tax rates down dramatically. They emulated the U.S., and we had a prosperous global community with peace and freedom for a long, long time. And that's what we desperately need, Michelle. These wars and these poverty things and all that, they're not any good. They're really bad. We need to go, and you can only have peace through strength and peace through economic strength. And when I say economic strength, I don't mean that the economy should jog 2.5 miles a day and do push-ups. I want economic strength as production, output, employment, least impact on the factors of production in producing goods and services, high productivity and prosperity for all classes of people up and down the line.
Amen to that, Art Laffer. Before we circle back to Bitcoin and gold, I want to get your thoughts that you mentioned war, and obviously there's no shortage of geopolitical flashpoints around the world right now. One of the arguments behind using sanctions as a weapon, just to play devil's advocate here, is that it's better than actually going into kinetic war, that it's a weapon that is preferred to one that involves planes and bombs and loss of life. What do you say to that?
I say that's just silly. Let me just give the John F. Kennedy quote, if I may here. And this is Kennedy back in the 60s. And I just loved, I was a Kennedy Democrat, as you know, and a Reagan Republican and a Trump Republican, and Clinton Democrat. John F. Kennedy said that the best form of defense spending is always wasted. Whenever you find yourself in a situation where you're required to use your military hardware and prowess, that is a clear sign you didn't spend enough. Putting locks on your doors is not wasted money. And when we talk about peace through strength, we mean peace through, you need to have a very strong military so you don't have to use it. You need to have a strong economy so no one wants to go to war. And when you use sanctions, they're not an alternative to military. They're a weakness that leads to bad military. And if you don't believe me, just look at what's going on. How many years have we been fighting in Ukraine? What happened in Gaza and now in Hezbollah up in the Golan Heights there? What's happening in Yemen and the Houthi rebels and stuff? What's happening in the Straits of Taiwan? Tell me what's going on down. All of this is just acres and acres of soap suds and horse manure. It is the weakening of the U.S. We have not done the defense spending correctly. We've not done the economic growth correctly. We've not done sound dollar correctly. All of these have made the U.S. look vulnerable and made it so that people are willing to try us out for size. When Trump was president, when Ronald Reagan was president, when Kennedy was president, they didn't mess with us. And the reason they didn't mess with us is we had a strong military and free trade and good economics. They wanted to do business with us and not wanting to fight us. Now they don't want to do business with us because of all of our restrictions and sanctions and all that. And now with the weak military we have, they want to fight us. That is not a winning strategy. Believe me when I tell you, Michelle. And if it goes on, this is what could lead to a serious conflict on a world scale. And Russia is no joke, and China is no joke. Right. And the last thing you want to do is get into a fight with them. And we are doing all we can to tease and torment and anger them as much as we possibly can. We need to set an example. Free trade, sound money, good economy, and increase defense spending dramatically so that we have the wherewithal that no one wants to fight us. It doesn't, big, strong, tough people who exercise a lot and know jujitsu, not many people get mugged who are like that. It's when you look weak that you get mugged, not when you're strong. And no one wants to, mug their employer. It's just silly.
Need deterrence. You absolutely need deterrence. Walk softly and carry a big stick.
And also a good opportunity for prosperity. You work with us, we love you, we'll all do business together, we'll all get rich together. That's the opportunity. And then if you want to fight us, we got a big military. You don't want to fight us.
But here we are now, Art, and arguably the Biden administration has projected weakness on the world stage and has weaponized the dollar. And that has led to this coalescing of the BRICS, Brazil, Russia, India, China, South Africa, Saudi Arabia, the BRICS +6. Other countries have joined them. Other countries are waiting in line to join them. To the argument of sound money, they are saying that they want to create some kind of common block currency backed by a basket of commodities, potentially including gold, potentially including oil. We don't know the details, but we do know that they want to stop using the dollar and that they are pretty serious, at least it sounds like they are, about coming up with some alternative to the dollar, which is a common block currency backed by commodities. How realistic do you think that is? Do you see a BRICS common currency as really happening and as a real threat?
Well, let me just say they don't trust the United States, and they don't trust the United States government, and they don't trust the U.S. dollar because the U.S. government is interfering in the use of the dollar and weaponizing it. They're weaponizing trade. They're doing all of that. So that lack of trust in the U.S. and anonymity and using of currencies is clearly an impetus for them trying to form alternative means of payment in the global community. Now, whether they can do it or not, I don't know if they can, but they're talking a very good game right now. But they have a long way to go before they can really develop an alternative to the U.S. dollar that would exude trust and confidence as a global currency must do. So they're not there yet, but they're surely moving in that direction. And the price of gold is a clear sign that the dollar is less trustworthy than it used to be. The notion of Bitcoin prices being very high. I mean, there's nothing to Bitcoin except as an alternative means of payment on a global scene. That's the only thing that Bitcoin has. And the fact that people are bidding up Bitcoin is a clear sign of their distrust of the U.S. dollar. We need to reestablish trust in the U.S. dollar, reestablish trust in the U.S. economy, and you do that by not weaponizing the currency, by free trade, low rate, broad-based flat tax, spending restraints, sound money, minimal regulations, and then getting the hell out of the way and letting markets solve markets and increasing your defense spending so you have the wherewithal to withstand a serious military threat. And if you do have that wherewithal, no one's going to threaten you.
Right.
No, if you're packing a gun, not many people are going to come up and pick a fight with you. That's just the way it is.
I have heard you speak about Bitcoin, saying that it's a return to private rules-based money. It could be one of the most positive steps forward in global monetary history.
Yes.
Let's get it straight from you. What are your views on Bitcoin?
Well, my Bitcoin, I've seen the world evolve. I mean, it used to be the Romans used to have salt. They used as money. They put it over the left shoulder. The little thing we have there. The word salary comes from the word salt. And then you had cattle. You had all sorts of commodity monies. Cattle came there. And the word fee is the Anglo-Saxon word for cattle, which is sort of interesting and neat. And then gold and gelt and all this other sort of stuff and silver. And we have evolved all the way through in this process. And what we've always done is try to create a private money that would allow anonymity, would allow people to transact, to be able to say the value of that. And what we've done is had a synthetic currency. For a long time, the U.S. dollar, prior to 1914, Michelle, the U.S. government did not control the money supply of the U.S. Now, what they did do was they defined a dollar. It defined an ounce of gold as $20.67. They defined an ounce of silver as $1. They minted coins, but so did everyone else. But all the money was created were banknotes, private money there, starting with the 1913 Federal Reserve Board Act. The government has been monopolizing money. And what they've done is they've lost the ability to create a usable, trustworthy means of payment. And, that we're moving away from that. And Bitcoin is one very real possibility in this scenario, which is a rules-based system, and it also can be guaranteed of anonymity, which is very important. And gold is another one that can be done as well. So here we sit with alternatives starting to come on stream. Now, we have a long way to go before Bitcoin as it currently exists, which is an investment asset, turns into a means of payment. A store of value and a means of payment are very different than an investment asset in a portfolio. And what happened with gold originally was it was an investment asset, but then it became a means of payment once the Bank of England decided to stabilize the value of gold and create the pound as being locked to gold. Once that happened, all of a sudden the asset value of gold stopped, but the transaction value of gold just took over the whole world. That is where I see a possibility that Bitcoin could evolve into something like that. I mean, already, as you know, one country has declared Bitcoin as an official currency.
Yeah.
It may not be the biggest country in the world, but El Salvador is a country, and and the guy who's head of El Salvador is just amazing. Bukele is just one. I was down there with him for a little bit ago.
And I know you went down to El Salvador, which declared Bitcoin legal tender in 2021, first country to do that. You went down there with Kathy Wood of ARK Investments. I want to get your thoughts on that, but before we get to your trip to El Salvador, I want to go back to this idea of Bitcoin as a strategic reserve asset that former President Trump promised to make it during the Bitcoin conference in Nashville. He said that he would make Bitcoin a strategic reserve asset like gold, like oil, and he promised to keep all of the Bitcoin that's currently held by the U.S. And the U.S. is, in fact, one of the top holders of Bitcoin. It seized a massive amount of Bitcoin from illicit activities and nefarious actors. There's estimates that the U.S. government has more than 200,000 Bitcoin. This idea then sort of put forward again by Senator Lamas. She's introduced a revolutionary proposal that could see the Fed holding Bitcoin as a strategic reserve asset. And they say the move aims to stabilize the US dollar and provide a hedge against economic instability, similar to the role of gold. Do you endorse this idea of making Bitcoin a strategic reserve asset for the US?
You don't make an asset a strategic reserve asset. It makes itself. It creates its own qualities, its own attributes that it evolves into that. I can't decree gold as the coin beef realm or anything like that. what you really need to have happen is Bitcoin has risen in value substantially. So I think it's somewhere around $1 trillion worth of total Bitcoin outstanding. It needs to get to be a larger sum, but not that much larger. But then what has to be done, Michelle, is there has to be somewhere along the line, some entity has to stabilize the price of Bitcoin in terms of goods and services. Now, this transition occurred probably 2 centuries ago with respect to gold, with respect to silver, where it got stabilized, and where gold literally was the currency of the realm, and we had a stable price level there. That needs to happen with regard to Bitcoin, and it hasn't happened yet. But what Trump is talking about, I believe, is moving in that direction. What I believe Loomis is also talking about is moving in that direction. What I think Bukele in El Salvador is talking about is moving in that direction. And I think there's a good degree of power and strength in that movement of really getting some country or some group of countries to do a price rule where they can guarantee the value of the Bitcoin in terms of goods and services. And then it becomes a stable numeraire where banks will develop where they'll have Bitcoin reserves and then have a fractional reserve system. And it'll be a private system that will develop with a stable currency. From, up until 1913, I think the price level of the world stayed flat for over 200 years, Michelle. I mean, really stayed. It went up and down a little bit, but it stayed flat for 200 years. Since 1913, I think that the value of the dollar has gone up, has declined something like 35-fold or something huge. What you need to do is create a stable value Bitcoin in terms of goods and services. And once that's done, the investment aspect of Bitcoin will disappear and the transaction value of Bitcoin will dominate the world scene, or gold or whatever else. But it has to happen by markets, not by Art Laffer declaring it.
Well, but hang on. So you're saying Bitcoin as denominated by goods and services with a stable value, not as denominated by the US dollar.
Yes. Or in the US dollar, it can be. You can have other people pegging to Bitcoin. You can do that. But the key to Bitcoin has to be stable relative to goods and services.
But we haven't seen that. I mean, you mentioned the price of gold. The price of gold has, accelerated, changed, has been volatile as well as denominated by the US dollar.
Yeah, but yet from 1713 until 1913, the price of gold stayed stable in terms of goods and services for 200 years when it was the numeraire. And then when we did it with Bretton Woods, it was very under control there for quite a while. And then when we went off gold, and I happened to be in the White House at the time in 1971, 72, when we did the Smithsonian and when the U.S. went off gold, you saw the crazy events of the 1970s, the devaluation of the dollar, the hyperinflation. As I told you, when we took office on January 20th, 1981, the prime interest rate in the U.S. was 21.5%, Michelle. That's horrendously inflationary. Mortgage rates, inflation was double digit. The dollar had collapsed. Reagan and Paul Volcker brought it back to some semblance of stability. But with the period of W and Obama and Biden and Harris, you've seen the dollar weaken again. And there's no sign that I can see out there that things are going to improve substantially. You have to have a different Federal Reserve policy, and that happens to be controlling the balance sheet and trying to stabilize the value of the U.S. dollar in terms of goods and services.
So let's go back to Bitcoin then, in terms of that being.
For you. Can I show it to you?
Sure. I can't see the reflection, but I think it's. That's you with Bukele and Kathy Wood. Yes, in El Salvador.
Well, Kathy, as you know, was my student. I'm a little piece owner of ARC. I just think the absolute world of her. That was the picture of just us down there in El Salvador.
I saw Kathy posted that on X, and I definitely want to circle back to that and your trip to El Salvador. But I just want to get a bit more clarity on what you mean by Bitcoin being sort of based on a basket of goods and services.
People, what they want to know, what I want to know, I'm going to lend you money for the next 20 years. All right. We're going to do a 20-year bond. All right. We're going to define it in terms of a numeraire. I want to know what the value of that numeraire is going to be in 1 year, 5 years, 10 years, 15 years, and 20 years going out. Because that allows us to have a capital market that can trust in the value of the numeraire, in which you and I both have very different consumption bundles. But we all use the same numeraire, the U.S. dollar. When that dollar goes to it goes to the garbage dump, we lose out all on transactions. No one's willing to make loans any longer in currencies like dollars, et cetera. What we need to do is have a numeraire that is stable in value, and we can have trust will be stable in value on into the future. And once you have that type of trust in the numeraire, then you can develop capital markets around it. Bitcoin could serve that function. Gold could serve that function. They can. And what needs to be done is Bitcoin needs to have a price rule where some government or group of governments get together with enough Bitcoin in reserves. They don't need a lot of Bitcoin in reserves, but to intercede just the way Britain did, the Bank of England did, the old lady of Threadneedle Street did with regard to gold and the pound, which kept the pound stable in value for 200 years. And we need to develop that same thing with a Bitcoin or with something else to alternatively to define the value in terms of goods and services of the numeraire.
But then, Art, wouldn't that challenge the dollar's role there? Unless you back the dollar with gold and Bitcoin somehow, wouldn't that detract from the dollar's role as that denominator?
Well, of course it would, because the dollar's role has been degraded dramatically because of the U.S. government's policies on the dollar.
Right.
And if people want to move away from a weak currency, why wouldn't they? Now, if the dollar decided it would like to be as stable as Bitcoin, like the U.S. dollar did way back in the beginning of time, we defined an ounce of gold as $20.67. That's what we defined. The federal government also minted gold coins. It also minted silver coins. Now, private companies also minted gold coins and silver coins. The U.S. government did not have a monopoly on minting. And then what the U.S. government also did pre-1913 was did an inspection of the reserves of banks to make sure that there was truth in the accounting procedures, that those banks had the reserves they claimed they had. And that they did. So they defined what a dollar was. They minted coins, as many other people did, and they also audited the bank's balance sheets to make sure that there was truth in the balance sheet reporting. But all the rest of it, the U.S. had bank notes. These were notes on the liabilities of individual banks, not on the U.S. not on the U.S. government. They were not U.S. government. They were federal bank notes. And that's the way the system operated.
Art, before President Trump supported Bitcoin, he was pretty much against it because he did view it as a potential threat to the dollar. Now, we started off this conversation saying we've had the dollar weaponized, we've had the dollar debased, we've had the dollar devalued, but it's in the U.S.'s interest to change that and get the dollar strong, to get the dollar sound. At the same time, we're saying that Bitcoin could be the new sound money standard as based with goods and services. So what's the best way then to reconcile those two ideas? From a U.S. perspective, you want to keep the dollar strong, you want to keep it dominant, but you're also seeing these other trends happening. So it sounds to me as though there is a potential solution of some kind of backing of the dollar to a degree by Bitcoin and perhaps even gold. Is that what you would advocate?
You make the dollar trustworthy and you'll not have any of these problems. If the Fed said they were going to control the balance sheet and not allow wild expansions of the monetary base, if you saw the way we control the growth of goods and services, so if people could reestablish credulity and faith and trust in the U.S. dollar, all of these problems you described will disappear. People would love to hold the dollar. They'd love to do transactions in dollars. The reason they don't want to hold dollars, the reason they don't want to do transactions in dollars is because the dollar is being mishandled and being untrustworthy, and you're going to suffer capital losses if you go into dollars. No one wants that to happen, so they're moving into alternatives. If the U.S. is serious about keeping the dollar as the global transactions medium, they've got to make the dollar trustworthy and credible. And the only way they can do that is by controlling the growth in the monetary base and by making the dollar solid with regard to the U.S. economy and with regard to economic growth, period.
Art, you have tremendous experience, tremendous wisdom. You've been around. You're looking super youthful and energetic. And I believe, you're 83 right now?
Next week, 84.
Okay. Happy birthday. Again, as I said, I have to get the secrets to your longevity from you. Last time we chatted, you told me you just had another grandchild. Now, let's put it this way. How do you see the global monetary system in the next 20 years or so? By the time your grandkid the most recent one, at least the one that I'm aware of, turns 21. How do you envision the global monetary system given all of these conversations?
I'm not, to be honest with you, Michelle, I'm not good at that. And I don't know how it's going to evolve, but I do know that if it does evolve in the way of a dollar and a strong dollar and a sound dollar going forward, the dollar, the Federal Reserve, and the U.S. have to instill trust and faith in the U.S. dollar by limiting the expansion of the monetary base and by increasing the output of goods and services and making the U.S. a haven for production, for output, for employment by having low rate, broad-based flat tax, spending restraint, minimal regulations, and free trade. If the U.S. were to secure the credulity in the U.S. economy and in the U.S. dollar, it is obvious to me that just the way it happened under Reagan, it will happen going forward. And you will see the dollar becoming the global currency once again. And in 20 years, the dollar will be king dollar once again. And we won't even need things like Bitcoin or gold. We won't. But if you don't see them do that, people will try to find alternative currencies, and it will not include the dollar, and the dollar will decline dramatically relative to goods and services and become a secondary asset in a very sloppy, unproductive society. And those are our alternative paths. And these paths are explosive. Once you start getting credibility into a currency, people move back into it. The mere increase in the demand for dollars makes it stronger, means it lowers the inflation prospects. So these things build on each other. Creating credulity and trust in a currency is a cumulative event. And once you start that process, you can make the dollar stronger and stronger and stronger and stronger to what we're talking about, to where by the time my youngest grandson hits 21, he's not even one yet, but when he hits 21, the dollar will be king again. But it takes a while to reestablish credulity after the cheating and lying that's been going on about the dollar. And, frankly, I don't trust the dollar. I don't trust Powell and the Fed. I don't trust the U.S. Congress and government right today to create a good scenario for positive economic growth in the U.S. I know how to do it, Michelle. And it ain't, as Larry Gatlin says, it ain't rocket surgery. Low rate, broad-based flat tax, spending restraint, sound money, minimal regulations, free trade, and get your stinking hands off my economy and let markets handle it themselves. And we will become the paragon of economic prosperity, and our currency will be the symbol of stability and trust in the world. But if we go the opposite way, it's a real problem. And we have been going the opposite way.
Well, you said you know how to do it, Art. I believe you do. There's some speculation out there that there could be a role for you in the Trump administration. Some buzz from Bloomberg about you potentially throwing your hat in the ring for Fed chair should Trump win the election. What can you tell us about that? Do you
Thank
see?
You. I love it. As you can see, I love it. I don't know if you've seen my hat size just grow 4 hats too large. I have made my history in economics by not taking jobs from government. Once you take a paycheck from the government, you're an employee, Michelle, and you lose all your trust and all your credibility. You have to do what your boss tells you to do. That's the way it is. I was in the Nixon administration. I was in the White House. Then I was the chief staff economist there, George Shultz's right-hand person. And I found out what I don't do well. I don't do work for government well. My whole thing with Reagan, I never took a job with Ronald Reagan. I never took a job with Lady Thatcher. I never took a job with Donald Trump or any of these. And so therefore I can come in and talk with them seriously like I am with you, without fearing them firing me or doubling my pay or having. These people who work for the government, Michelle, and I'm going to say this harshly, but let me just say it very harshly, right or left, it doesn't matter. These people who work for the government will rebut arguments they know to be true in order to curry favors with their political benefactors. I will not do that under any circumstances. I need to, when I walk in and talk with Donald Trump or with Joe Biden or with anyone else, I need to not be beholden to them for a paycheck. And I need to make sure that the advice I give them is true and best I can possibly give them without worry about them not liking the advice. Now, obviously, when I leave the room with them, I don't go running and squealing and tell people what I said and what they said back to me. I don't do that. I respect them and treat them very favorably, but I don't take a paycheck from politicians. And once you take a paycheck from a politician, you are corrupted. And I'm never going to do that, Michelle, ever, ever, ever. So how's that? And that's about Methuselah.
So no official role for you in any administration other than as an economic advisor.
Yeah, and I used that with Reagan, and I had a very great influence on Reagan. All that stuff was mine, not the employees there. I mean, the stuff with Trump in the first term was, I think I had a big influence. I mean, he gave me credit for the medical transparency and the Tax Cuts and Jobs Act. He gave me a lot of other people too. But all of that stuff, and and I love that. I love giving advice, and I love being loyal. But I don't like getting a paycheck,
right?
And I don't like having to say I've been fired from lots of jobs because I said that what I believe to be right. I'm not always right. Believe me, I'm not. I know lots of people.
But I get your point that it keeps you intellectually honest, where you're an independent advisor and you're not feeling like you have to pander. Let's talk about, though, the advice that you've given to another world leader. I know you showed us the picture of, and bless you, by the way. I know you showed us the picture of your visit to El Salvador with the CEO of ARK Invest, Cathie Wood, where you both met President Nayib Bukele. I know you discussed a number of topics, including Bitcoin, emerging capital markets, technology, innovation, artificial intelligence, tax policy. And as we mentioned earlier, Bukele made history by making Bitcoin legal tender in El Salvador in 2021, first country to do so. So what can you share with us about some of the things that were discussed on that trip?
Let me talk about El Salvador, if I can. Nayib Bukele took office 5 years ago. At that time, it was El Salvador was the murder capital of the Western Hemisphere. MS-13, as you know, and all the stuff. He spent the first 5 years getting rid of crime. It is now the lowest death rates, the lowest murder rates in the Western Hemisphere. He has solved this problem. He was just reelected with a huge majority. I think he got, 86% of the vote. He has appointed all 5 members of the Supreme Court in El Salvador. They have a unicameral legislature, which is a supermajority from him. He has a pretty much of a clean slate as to do what he would like to see done, and what I would like to propose for him. And I think this is going to happen is I would like to propose an economic policy plan for the Bukele administration to create prosperity in El Salvador, second to none in the Western Hemisphere. Now, as you probably know, I was very involved with Chile back in the 1970s, with Pinochet, with Sergio de Castro, Ralph Luders, all the Chicago boys. We put through the prosperity plan back then. It was the miracle of South America. Chile was the best performing country for 30 plus years. I also was down there with Menem and Roque Fernandez, Pedro Poe, all of my students there in Argentina during the Menem reforms, and Domingo Cavallo and Carlos Rodriguez and all of the wonderful, wonderful people there at the time created a great prosperity that didn't last all that long in Argentina, but it did do it. And also in Puerto Rico. I would like to be able to design a plan for El Salvador to create the most wonderful, prosperous location ever, with a government that can put in the right policies across the board. All of these things cannot be done. They can't be done by just sitting there in a room. Well, what about this? What about that? What about? You need to do academically sound, complete, comprehensive macroeconomic reforms. You've got to look at the whole system, and you've got to make it so it fits for El Salvador. Something like the Switzerland of the Americas is very possible. El Salvador has about 6.5 million people. It's desperately poor. It can really do an amazing job. This is a country that could create prosperity and could become the as Ronald Reagan said, the shining city on the hill for all the rest of the Americas, much the way Chile was, much the way Argentina was under those. And I've talked about that with Bukele himself, the president, and also with his brother, Ibrahim Bukele, which I spent a lot of time with It would, of course, include monetary stability. It would include, of course, things like Bitcoin and other things, but it would be much, much broader than that. It would be tax reform. It would be how to get the government balance in order. It would be how to create the prosperity that is so desperately needed by all the citizens of El Salvador. And, when you look at that statue there, El Salvador del Mundi, I think it's called, the savior of the world, and you've got the picture there. It is absolutely amazing. And this is a person who wants to do that. And I am here as his servant, making damn sure that we can provide him with a plan that would create the greatest prosperity imaginable for El Salvador. And that's what I'm hoping to do there. I'm also working in Great Britain, as you probably know, with the Conservatives on Reid, directing the Conservative Party to get a template of good economics, not just one-liners and speechifying and 30-second sound bites, but getting one that really is a comprehensive, well-thought-through plan that would allow the Conservative Party to come back and do what's really needed in Britain. Britain desperately needs help. This government that's been elected in Britain is not going to work well. Believe me when I tell you that. And we need to have a new government. We need to have a new set of policies. And I'm working with the Conservatives there to get that done. Whether I'll be successful in these or not, I don't know. Whether they'll want to use them or not, I can't tell you. But I'll tell you that is my dream, is to create a prosperous El Salvador as an example of what can happen and what should happen and what is needed. We need to be governments need to be people of the poor, of the rich, of all people, to create the best. I mean, Teddy Roosevelt said it, this is the one that the government needs to allow the person to be the best he or she can possibly be, and to create those policies that allow all of us the opportunity. And, here in the U.S., we have all sorts of problems in the inner cities because of property tax regimes and because of welfare programs cutting off and stuff. We have designated the inner cities as being held in a poverty trap. We need to get rid of that. We need to allow the very poor, the very minority, the very disenfranchised to share in the prosperity that Ronald Reagan created, that Jack Kennedy created, that Donald Trump created. That we need to do that for the global world. And I'm here to do the best I can to these governments to provide them with an alternative template as to how they can create the prosperity and create the opportunities for their citizens. And anyone who wants me to do that, I would gladly come and do it, and with pleasure. And it's my dream. When I go to the hereafter, Michelle, I want that on my tombstone.
Art, you have been called a national treasure, and with good reason. I know you're finding yet another way to make your mark and leave an impact on this world. I know you're working on a book with Stephen Moore at the moment. Can you tell us a little bit about that?
It's just exciting stuff of what a Trump second term should look like. I mean, what I think should be done, and this is just me. It's not, although I've mentioned it to everyone, I have no buy-in from anyone else, so I can't speak for anyone else. But I'm worried about the participation rate of the U.S. having dropped so low, and we've been in this stagnation for 25 years, this period of senescence, as I've described to you, of the U.S. economy. We need to bring people off the sidelines back into there. I would like to see a policy where we waive half the payroll tax for 18 months. A first action of a new president would come in would be waive the payroll, half the payroll tax, so that there would be a huge jump in pay, a huge drop in cost for employers. That would take all the employees off the sidelines, bring them back into the work, make it temporary, so if you don't take it now, you don't get it. I would love to see 100% expensing of capital purchases again for 18 months. That increases the internal rate of return that would bring capital investment back into the economy, bring labor back into that economy, to jumpstart that economy, to create growth rates like we had under Reagan. As I said, from January 1st, 1983 until June 30th, 1984, the U.S. real economy grew by 12% in 18 months at an 8% per annum. We can get growth rates like that if we do the right policies. I want us to go to the Fed policies of maintaining the balance sheet, like I've talked about. I want an extension of the Tax Cuts and Jobs Act, especially the inheritance tax. Michelle, old people like to work for their grandchildren. And if you're going to tax the living hell out of all their trusts and say they're going to stop working. I want to see all of these things done in the labor markets and the capital markets and in the trade markets. I'd like to see that done to make it a free U.S. economy that would attract economic growth and prosperity and allow people to achieve the prosperity and wealth that their dreams have for them. Bobby Kennedy said, I look out at the world and I ask why, and I imagine what could be there, and I ask why not. We can create the political economy of growth, Michelle, and provide the opportunities for the world economy without going to war, without bombing each other, without doing all that stuff. The answer is not hate, it's love. And I really mean that very seriously. The answer is not slugging someone. It's inviting them. Raise the tent, bring the people. I don't give a damn if you're transgender, straight, gay, whatever you are. If you want tax cuts, you've got a place in my tent. I'm here for growth. I'm not here for sitting there and being mean and picking on other people. As long as your fist doesn't hit my face, I'm going to let you do pretty much what you want to do. And as long as you don't try to hit me in the face with high taxes, massive regulations, misspent monies, all this trade interjection, just leave me alone and let me do my economics and let you do your economics, and we'll have that prosperity. The dreams we can attain are amazing. And Ronald Reagan did a great job. Lady Thatcher did a great job. And Trump did a great job for the best first 2.5 years I've ever seen of any president ever. It was incredible. And then, of course, we got hit with a pandemic, and all the socialists came back and pounded in on, I control you, can't leave your house, you must wear a mask, blah, 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 all that stuff. Let people be who they are. Give them the good, fair basis, and they will provide the prosperity that we so desperately need. That's what needed, Michelle. And that's my story, and I'm going to stick to it. How's that? And by the way, I love being on your podcast. I've done, this is my third one, and you are the most thrilling, exciting podcaster of anyone anywhere. Thank you very much for all you do.
Oh, Art, that is just the most amazing compliment. You're actually making me blush. From a living legend such as yourself, that is such a wonderful validation. We will end it on that wonderfully positive note. Always a pleasure chatting with you, Art Laffer. We look forward to having you back on soon. Thank you again so very much.
Whenever you ask, I'm here.
Art Laffer, always an honor and a pleasure. Thank you again very much. Of course, thank you to our viewers for watching. And we'd also like to thank our sponsor, Swan Bitcoin. As we wrap up here, I'd like to highlight that there is a Swan IRA product, which in fact allows you to take advantage of the potential benefits of Bitcoin in the long term in a tax-advantaged account. Tax, obviously, a very big topic for Art Laffer. Now, with a Swan IRA, you hold real Bitcoin, not proxies, and then you're allowed to defer all of the taxes till retirement. And you can initiate a transfer or a rollover with your current IRA. And again, you're holding real Bitcoin in your IRA, not proxies. And there's a way to set it up that's very simple. And you're basically buying Bitcoin on autopilot. And then that allows you to take advantage of dollar cost averaging as you accumulate Bitcoin into your IRA and some of those very volatile Bitcoin price moves. Now, there's a description in the link of this video with a special offer for Kitco viewers to help you facilitate that process. So make sure to check that out. And as always, thank you so much for checking us out. If you're watching us on YouTube, please subscribe and leave your comments. We do love to hear from you. So feel free to participate, to praise, whine, or just opine. We do read your comments and we do reply. So for me, Michelle Makori, and the rest of the Kitco team, we look forward to seeing you again soon.
On the Spot with Michelle Makori is brought to you by Swan Bitcoin. Swan Bitcoin IRA. Your legacy, your way. Real Bitcoin, not proxies. Traditional and Roth IRAs. Fast, easy setup. Start now at swan.com/retire.